What is going up, traders? So, in today's video, we're going to be talking about the 3 things you should ask yourself before you make a trade. And this trade is going to be in the stock market, of course, because that's what I do. I trade in stock market. But all right, number 1. So, am I trading the right stock? So, pretty much from the top risk management technique, it all starts with choosing the right stock. You could have the best strategy, the best software, the best tools, the best platform. But if you choose that wrong stock, you will lose money 100% of the time. So now this is pretty much where beginners will find themselves having difficulties. I know I felt it. I had a hard time finding stocks. I thought when you were a day trader, you pretty much just picked out stocks that you kind of thought were good on the day. I didn't know about scanners and technique and stuff like that. But choosing the right stocks, it is 100% from experience. You're going to be looking at those volume, that float, the patterns. You're going to be looking at all of that, and you're going to be able to make a trade off it. And so pretty much you can't make any money if you choose those wrong stocks, which is very important. All right, number 2, before you make a trade, you should understand your share size. So this is my, kind of my share size, kind of like my go-to in between these ranges and here, just from, the risk to my 2% of my account, just so I understand that I can still, make, pretty good money from looking at a stock that's $3. Okay, I'm looking to buy, 300 shares. I'm risking 2% of my account. Okay, stock goes up $1. That's $300. Looking at a $6 stock. Stock goes up $6. That's profit of $150. So now that's pretty much how I pretty much make my money. I'm looking at a combination of all of these things, share size, the stock, the risk. I'm looking at all of that to pretty much make money. And when I first started trading, I wanted to have this account size. I had this account size, but I was trading with this share size right here. And as you guys know, that is a recipe for a disaster. And that's what happened, obviously. Blew up that account like boom. And then I lost money, started over, read a lot more. And then I, came across this, so I thought it was a good idea. So a lot of people, they want to make that $1,000 a day, but they only got $500. Think about that logically. Do you think you can double your money in a single day by trading? Yes, it happens, but is it likely? Would that be a smart trade? No, it wouldn't. That means you'd be risking pretty much your entire account to make that profit. So some traders will be like, go all in one stock. I would rather just hit those base hits, boom, 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 have those $60, $80, $100 days, add those things up with a small account, and that really starts to pick up that momentum. Pretty soon I'm hitting $200 days, $150, $300, $400. Pretty soon I'm at $1,000. Within 6 months, 12 months. But I would not advise anybody to just immediately start doing that. It obviously takes time, practice, and education. So, and then another thing, if your goal, like I said, is $1,000 a day, so getting back to the share size here, do you think you can make $1,500 per day on 10 or even 40 shares? No, that will most likely not happen unless you're buying 10 shares of Berkshire Hathaway, which is a very expensive stock. If you guys don't know, it's around $300,000. But you just have to understand pretty much your share size will always start to increase with your account size. Always have that in the back of your mind. I know I had a little bit of a difficulty when I started building up my account. I would get a little nervous because I would be, I would have so much money out there, but I had a larger account. It's just that emotions kind of got to me. That I'm not really talking about this in this segment here, but always keep that in the back of your mind. All right, number 3. What is your stop loss? Now this is 100% up to you. Now I would not risk more than 2% of my total account for any trade, because if you have, let's look at this example here. If you have $10,000 in your account, you should not risk more than $200 per trade. That is very, very smart. Now, this is where many beginner traders fail because they don't cut their losses early and they don't ride out their winners. They do kind of the complete opposite. On their profits, they buy or sell their stock and then take short profits, but they take bigger losses, if that makes sense, because they think it's going to bounce. It doesn't, and it falls. And then when they see green, they panic and click sell. I found myself having that problem, so this is a good way to kind of balance that here. Is just automatically know 2% of your account, and then I always take profit anywhere from 7 to 10% automatically. That's just how I am. So if you guys are wondering what this is, this 56-page masterpiece, this is going to be my book. I felt like I would make a very, very informative kind of video on it. So that's it though. I hope you guys enjoyed this video. Please sure to like, subscribe, comment if you're new, if you guys want to be a part of the trading team. That'll be in the link in the bio. And I did take a couple of days off here, but I am back tomorrow. I'm back. Alright, so peace out. Remember, always stay happy, stay positive, and I hope you guys have a fantastic rest of the week.